This is Satya Pradyuman of Cirrus Research. The latest issue of the Signals Report is just out. The Signals Report is our most detailed asset allocation monthly that comes out. The title of this report is Risk On Stance, Supported by Fundamental and Tactical Measures. I think many investors, thanks to the November election and the behavior of the markets in November, now believe that we really are off to the races. And in some ways, the fundamentals might support that. When we look at the earnings cycle, the profit cycle as a whole, we continue to see a profit cycle that's bottomed and has begun to recover. In addition to that, fundamentally, we see credit spreads historically low. So this setting is very favorable for a risk asset backdrop. In addition to that, what we've noticed, however, is that the risk measures that we track, for instance, risk appetites, this measure currently is benign. What it says to us is that risk appetites have a long ways to go before this reverses. Now, bear in mind, these are tactical measures. They can move very rapidly. But based on our metric, the longer term average is currently where we're residing. And to see a period in where risk assets really start to flash red, besides the fundamentals, would be this measure, the risk appetites begin to climb to an unusually high level. This tends to be a very contra signal. The current reading clearly indicates that we've got room. In addition to that, crowding. This is also something that we all sort of quote, which is, hey, the three stocks are accounting for X percent of the market gains. The bottom line is that if those stocks are earning their way into their market cap, maybe it's not so bad. What this model relates is that the multiple for leadership stocks remain benign. Granted, thanks to the last few months, it has begun to climb, and it's something we're going to have to watch more closely. But if the question were to be thrown as, do we see a sort of risk-on trade as we close the year or as we open 2025, the fundamental setting remains in place, and the tactical settings allow us to see this sort of trending market to continue. Importantly, if I broaden this view, when we look at the smaller cap market, we've seen a massive run in the last couple of months. What this also relates is that the crowding or the leadership stocks in small cap land, they're nowhere near excessive levels as well. In fact, when we look at the leadership baskets, one thing that's really constructive is on the large cap side, what you'll notice is that we've got, as much as there are a lot of technology stocks in leadership, in fact, our measure now relates that we've got more financials in the leadership basket. Counter that to the smaller cap profile, we've got leaders in healthcare, financials, industrials, and then technology. So in other words, this sort of broadening of the market is likely to support the smaller cap arena. And importantly, though, the fundamentals seem to drive share prices here. With any questions, feel free to reach out to us. Thank you.